Hello and welcome to PE Value Drivers, conversations about driving value in private equity. Today, I'm joined by Todd Markson from Bain Capital. Todd is an operating partner with Bain's Tech Opportunities Fund, where he leads value creation efforts across the portfolio and partners with management teams to support their key initiatives. Prior to joining Bain Capital, Todd was CSO and COO at Cengage, a multi-billion-dollar private equity-backed global education and technology company, where he led strategy, corporate development, channel, pricing, procurement, and supply chain. Before Cengage, Todd was management strategy consultant in London, Dubai, and Boston, most recently as a senior principal in the technology and private equity practices of BCG, where he focused on go-to-market. Early in his career, Todd was a technology entrepreneur in Silicon Valley, co-founding and successfully exiting education technology and information services companies. Todd's a graduate of Brown University and got his MBA from the University of Michigan. Todd, thank you so much for joining me today. I really appreciate your time. As I know your insights and unique perspective will be really valuable to our audience, especially given the broad background you have, and really excited to spend a few minutes with you.
Well, thanks for having me, Slade, and look forward to the conversation.
Great. So Todd, why don't we just jump in? If maybe just start, tell me a little bit about Bain Capital, in particular the Tech Opportunities Fund, and where you invest.
Absolutely. So Bain Capital is, a long-standing private equity firm founded in 1984, one of the leading multi-asset, alternative investment firms with over 160 billion in assets under management. As you said, I specifically work for the Tech Opportunities Fund, which is the latest vehicle in the Bain Capital family. We're focused on high growth, mid-market B2B SaaS companies across fintech, healthcare, IT, infrastructure and security, ed tech, and applications. We've already invested through our first fund, which is about $1.5 billion. We're investing now out of our second fund, which is well north of $2 billion. And so really, great traction, really excited about being part of the early days of the Tech Opportunities Fund. And I specifically lead the portfolio group where we partner closely with all of our portfolio companies to help them in the next phase of their growth journey.
Great. What drew you to private equity? You had a great career in industry and consulting. What was attractive about private equity?
Yeah, I've been in and around private equity for a little over 15 years. So 7 years as a consultant at BCG, where I was in the PE practice and the tech practice. Working with PE firms on diligence, but also sort of value creation opportunities. So working from a consultant side, it was also 6 years at Cengage, which was a PE-backed ed tech company backed by KKR, Apex, and Searchlight. So certainly knew the environment through that experience. And obviously now 2 years at Bain Capital. So I've always been attracted, to me around being able to invest in something you believe in, really, combining strategic capital with the vision and execution of really exceptional founders, and working with those founders to sort of see the business grow over a period of time. And so that to me is something that, is exciting. When I was a consultant, I was working with really impressive people, but having the skin in the game where you actually put your money where your mouth is and actually sort of invest behind those themes is really invigorating. And also, frankly, just like the intensity. I mean, all the sort of different stops along my career have been intense, analytical, with a strategic mindset, and PE is obviously no different. The rush of being in the middle of a deal, especially a competitive situation where, I think, capital is relatively of a commodity, and so the idea that the founders are looking as to choose a partner. In terms of, what's your analysis, what's your thought process on how to partner with them going forward. And so that sort of, moment in time to me is something really invigorating. And obviously the journey, the 5 to 6 to 7 year journey after that is also really, really exciting. So that's what drove me to be.
Nice. You have a very, I think, as I mentioned, diverse background. It's somewhat unique, I think, among operating partners. Do you think that gives you some kind of a edge or additional insights? I'm just curious.
Yeah, it does. I mean, it's an interesting. To your point, it's an interesting background. I think the sort of table stakes of an operating partner, portfolio group member, is sort of top tier consulting, and then then operating experience. I certainly have that. I also have the startup experience as well, which I started my career on. And so I think, all of those I sort of tap into at different times. Clearly, the startup environment, while our companies are more mature than the companies I started, the idea of founding something and building to scale is something I have an appreciation for. The idea of, sort of raising capital, the idea of attracting employees to your vision is something that obviously from the startup experience I had is something that I, obviously see within the founders we back and can tap into that. And also the idea of building is something that, I got through that experience. Obviously, the consulting background is very much, typical of an operating partner, where I was working across industries, working with sort of Fortune 500 companies on key strategic issues. And so that, analytical mindset, the strategic mindset, and more importantly, working with people to get them to, align on a set of ideas backed by data is something that obviously we do, day in and day out here. And then I was, the PE-backed experience for sure is something where, I operated for multiple years. That puts me in a position where I can say I've been in the seat when we're talking to the C-levels at a target company or our current portcos. I see the operational machinations that, that I've experienced and they're going through. And I understand, I always say the best strategy that I've ever done was when I was an operator, at Cengage, because it really matched strategic vision with actual operational sort of strength and the ability to get stuff done. And understanding the timing and the machinations of all that is something that I think, is really important. And I think, so all that, I think from just a background perspective, I think, is stuff that I tap into, constantly. I think the other piece that makes me effective and makes, I think, all of us at Bain Capital here effective and what we look for in, any new person that we're hiring, is a willingness to roll up our sleeves. We're not just sitting in our offices, kind of like directing traffic. We're, in the room, they're whiteboarding, on specific projects. We're actually, doing those efforts and sort of tapping into our experience base. And then that's a maniacal focus on being impactful. We measure ourselves on, carry value increase, and how we're going to continue to increase the enterprise value of our businesses. And that's something that, every sort of month or so we look at and make sure we're, actually driving impact and helping the business grow. And I think that, the balance of IQ and EQ, right? At the end of the day, these are small businesses. You got to earn a seat at the table. We don't go in and push ourselves into our portcos and say, thou shalt do this. We, start small and earn the respect and earn kind of the seat at the table by showing that we can drive impact, by showing that we can influence, by showing we can be a supportive partner. And I think those skill sets are what, you look for in someone coming in, because there's a lot of people with sort of consulting background, operating experience. It's kind of those intangibles to me that really differentiate us.
Great. I mean, you certainly kind of been in multiple people's shoes, so to speak, right? So you can really, I think, appreciate and understand the point of view of all the different stakeholders that you're engaged with. Absolutely. So I'd love to talk a little bit more about how you do engage with the portfolio company, with the deal team, and in the transaction. When do you tend to get involved, and kind of what's your role in that process?
Yeah, I mean, the great thing about Bain Capital is a few things. One is we get very involved early in the process, and that was something I was looking for when I was considering becoming an operating partner. We're involved in all the in early stage investment committee meetings. We're involved in a deal specifically right after prelim IC. So specifically, we pitch a deal to the investment committee. That's kind of our early thoughts where, hey, we think this could be a deal we want to do. Immediately after that, myself or someone on my team is involved in that deal. So that means we're actively engaged in the due diligence. We're going through the models. We're underwriting the plan, because we have to deliver on that over the next X number of years of our hold. We also believe that helps us with our right to win. So that we're over the couple months of a diligence, or a few months of a diligence, our ability to create a relationship with the management team and highlight how we can work with them, oftentimes tips a deal in our favor. And so we really believe that's a differentiator. It increases our right to win, and it also helps us hit the ground running. For us, the first sort of 6 months to year of owning a portco or investing in a portco, is really critical. setting that company on the right trajectory, making sure that we, sort of tap into all the different value creation ideas that we've had during the diligence is really, really important. And so, if I can create a strong relationship with the management team, we can align on those, 3 to 4 critical things that we need to do. Then, day one, I'm already starting to, work with the teams on those. We already have, either third party set up if that's necessary, or we're already sort of co-creating the solution right off the bat. And so that's something that, we find to be really effective. And I think the key thing is, the minute we make an investment, not only getting alignment on the 3 to 4 important things to do, but it's also setting the metrics that we want to track to make sure that the impact of those are being felt, and that we can see the trajectory change. And so that's something that we'll establish pretty early on, which I think 1 gets alignment, 2 gets us make sure that we have the systems and data and all that to actually track that on a regular basis, which sometimes is not an easy thing to do. And then the ability to kind of look at those things and adjust, and course correct accordingly is something that, within the first sort of month or so, we really want to, establish. So that's how we work with the portcos. It's, it's the reason I joined Bain Capital is because of that early engagement. And I do think it's a strong differentiation for us, vis-a-vis some others.
Yeah, and I can certainly see how just building that relationship and trust right from the beginning makes that a much more seamless transition post-transaction, right? So that you're actually just continuing to work with the team because you've been working with them all along.
Absolutely.
So I recognize every situation is different, every portco is different, and every value creation plan is different. But when you think about adding value and increasing enterprise value, are there common plays that you tend to look at and kind of areas in which you start, especially since you're kind of a sector-specific investor?
Yeah. I mean, I think, first and foremost, we don't have a playbook. We don't have sort of a typical playbook that we sort of dust off for each deal and say, here's the plan. I think for us, we have some core principles when we're thinking about value creation. So first, that it should be specific and customized, right? So every plan that we have is about that specific company. It's about what is needed to help that, business grow and take a different trajectory than it already has. And to be clear, we're already investing in high growth businesses. So these companies are doing really, really well regardless, but obviously we're investing because we believe there's opportunities to, increase the scale, increase the rate of growth, within these businesses. So, that business, for every business and every due diligence process and every value creation plan is very specific and customized. I think the second thing is it needs to be fully aligned with management. So, no plan that we put in place or think about, does not have the blessing of the management. It needs to be fully aligned with them. And so we spend a lot of time, as I said, in the diligence process up front, but also just even after the investment, making sure that we, ordinarily prioritize those different initiatives, commit to resources on each of those, and get them moving forward. Most because of our growth orientation, I mean, most of our value creation plans are focused on fueling the growth. This is not about going in and cutting costs. It's not about things on that side of the ledger. Obviously we want to do things efficiently, and not throw money at growth, but for the most part, these are focused on go to market, professionalization, optimizing of pricing, M&A to sort of add scale, adding talent that we think will be differentiated. So really, the most of the effort is on kind of amping up growth. And I think I mentioned this earlier, but fourth is earning a seat at the table. It's really becoming trusted advisors to the team. We want to be pulled in, not pushed in. We want to be invited into it. And so that's kind of a core orientation of our efforts. And I think finally our value creation plans take advantage of the breadth of Bain Capital. So it's not just me and dedicated to a portfolio company, it's our whole deal team. So if there's key initiatives we're working on, especially M&A, we'll bring the original deal team that worked on the deal back into that to help drive that and do the diligence on a tuck-in, even on pricing projects where we need sort of analytical heft. Sometimes same thing, we'll bring in the deal team to kind of help support some of that. And then there's the larger Bain Capital we've worked with across all of our portfolio groups, for the big PE fund or for other funds, we tap into that network and sometimes even bring those in to bear. And so that's, I think part of our approach to our value creation plans and and the way we differentiate and the way we kind of bring value. But it's not, if you look at all of them, I think, yes, focused on go to market, yes, earning a seat at the table, but they're all have, nuances to them that are very specific, customized to each business.
Sure. Makes sense. So I'm curious, how do third-party resources like chief outsiders or others fit into that value creation strategy?
Yeah, I mean, we obviously, we are a leverage strategy. So I mean, we have a small team. It's myself and two other, sort of operating resources plus a head of talent. We'll grow maybe one or two more individuals over as we continue to scale. But it's really, and we work across 3 to 4 portfolio companies at a time. So it really is a leverage model. As I said, we do sometimes roll up our sleeves and get in and, and do the work. There are obviously some bigger projects that require third parties. And so, often, for us, it's around, creating a curated list of third parties that we trust and we've worked with. And obviously, we need to first work with them. So it's
Sure.
a lot of is first getting that at bat, to get that trust and see the impact they can drive. But once we get, that and we realize, there's a real opportunity for them to, to drive value, then it's really identifying the core projects that require third parties. And ultimately what we do is we recommend, 2 to 3 third parties for a specific topic to the portco. And for us, that's really important. One, they believe that we've, curated that list, that we sort of know those individuals. We're not just sending them someone that, we have no familiarity with. But we really want the portco to then choose their partner. Because I think it's important for them to obviously have buy-in on who that is. And so, we go through that process with them. We obviously, walk through the kind of RFP process or the sort of, selection process. But ultimately, they're the one who says, we want to work with the chief outsiders, whoever else we've teed up. And they obviously pay for it. So, it's their sort of skin in the game for this. So for us, it's, for third parties, it's really around people who are focused on B2B SaaS, who know that space. Obviously, that's the sector we're investing in. So that's kind of table stakes for us. Know the middle market and high growth. This is not trying to get incremental 1 to 2%, increase in growth. This is around, really taking a step change. And so I think, for folks who have that experience, B2B SaaS, high growth environment, then that's who we like, and people who are willing to roll up their sleeves and show impact. This is not about delivering a PowerPoint. This is around actually making tangible change.
Yep.
And so, folks that have that orientation, we're happy to have conversations with and get to know. And as I said, find the right opportunity to get in at bat with. And then once you're in, once you prove that effectiveness, obviously you become part of that, ongoing group of people that we'll reach out to on a regular basis.
Yep, that makes perfect sense. And again, speaking for myself and chief outsiders and probably, many other consulting partners that you work with, that thoughtful approach and really enrolling the management team in the process and selection and that buy-in makes our jobs that much more effective and makes it that much easier for us to have impact. So I really appreciate that. Look, I don't want to take up too much of your time today, but I'm curious if you have any kind of words of wisdom or advice for other operating partners or folks involved in value creation on how they can kind of raise their game based on what you've learned.
Yeah, I think it is a different model. I mean, people coming in from consulting and then an operating experience, this is kind of a blend of the two, right? I would say, you definitely tap into your sort of management strategy consulting experience because you need to be analytical. You need to kind of get people to, to a common vision. But the operating experience, there are times where you're operating, you're taking on interim roles, you're actually driving and leading projects. And so it's a great mix. And that's why I think, that's the sort of typical background. I'd say one is, for me, the importance of being engaged with the deal team and not having, your portfolio group be disassociated from what's happening in the deal flow, because I think, you're hampered greatly by having that situation within a private equity firm. I think, our model, works really well. And I think, if you're looking to come into this role, finding a PE firm that really make sure that happens and truly believes in the value that an operating partner can bring to the portcos. It's not a check the box, we need to do this for LPs environment. And so that's, something that, is more and more important for our role is getting that buy-in and being a partner with the deal team, early on. So I think that's critical. I think obviously getting into the weeds, this is not a project management role. Some firms have it as that. I think this is, really understanding the drivers of a business in depth and what's going to work and being focused. I think, an operating partner who tries to do 50 things is going to be ineffective. Choosing the 3 or 4 things that matter that will actually change the trajectory of the business is, I think, critical, and really, driving those all the way to impact, is important. So I think, to me, that would be the advice. First choose the PE firm you're going to work with, smartly, in the sense of that they really buy into this. Get into the weeds, and focus, and then focus on impact. It's the 3 to 4 things, but also like put the tuning in place to measure your impact. So I think if you can do all those things, you'll be effective.
Perfect. And I'm sure easier said than done, but you certainly, shown the path. So I really appreciate it. Great way to end the conversation here, and great advice for fellow operating partners and value creators. So Todd, thank you so much for spending the time with me today. Really know the folks that listen to this will get a lot of value from it.
Sounds great. Thanks, Slade. Great conversation. Appreciate it.
Thank you.